Hi, it's David here with Futures Trading. I want to direct you here if you're new to trading and you're looking for a formal way of getting trained on how to trade the markets. I offer you these three sessions here, the only real-time identification process that's online. So I'm not using any regurgitated information or versions of what's already online. I'm not doing that. Really important that you understand that. Within these three sessions, you will learn how to read the hard right edge because that's what I'm doing. I'm reading the live bar, the bar that's moving, and I'm telling you by its movement how far the next bar should travel. Really important that you understand that. So it's fluidity. The market is fluid, and I want to prove to you that you're capable of doing just that. So if you're new trader, start with one and work your way through. If you're already an experienced trader, you just want to learn, some of what's on here. If you're interested in the content, I suggest that you go ahead and go with session three. All right, you can go ahead and go in there again. We're going to be covering this thumbnail. I want to outline to you some of the trends that was there again because I was reading it in real time. The chart is a little messy, but I want to show you what that is, and we're going to take a look at that price, that 17,513.50. We're going to take a look at that as well in this video. But before doing so, we're covering the majority rule. All right, so the majority is the principle that the group which has the most supporters get to decide the rule that all, including the opposing minority, will be compelled to abide by. Now, what does that look like on the chart? Let me get a diagram for you really quickly here. Want to show you something. All right, so we're trying to do this. This is what the majority rule is. So we want more of this run, the majority of this run to be above the prior bar, well, the prior pivot high. We want majority of that run to be above the prior pivot's high. Now, if it's bars, which that's all runs are, they're just having it on a different time frame. This bar here would be your trend bar. Okay, that would be your first bar, and then your second bar will come in, and we want the midpoint of that current bar to get above the prior bar's high. So this is what majority will look like, and I want to point it out to you in the chart. All right, really important that you know that. Mentorship. Now, I'm not here to do a great deal of this. I'm doing this just right now within this video. I want to kind of guide you towards looking at the chart. But then after that, I want you to start listening to the chart because I can't tell you what the market is going to do because it's a fluid event. But I do want to make sure that you're prepared to listen to the market. That's all. I want to make sure that you're prepared. And so, with what little information that I'm going to provide you right now, I want you to look at the market for, that relationship that you would need with it to further you along your journey. All right. So it's really important that I say that to you. Advice. So the mentor gives help and advice, but if the advice is canceling out your help, you can't be mentored by the individual. And better yet, if you can't listen to the market as it advises you, you will not get the help that you need. So I want to make sure that you can hurry up and see what's going wrong. All right, really important. So if you watch the video and you're not finding anything that I'm going to say of any use, please do not subscribe. Please don't do that. Time is an allotted portion at your disposal suitable for a purpose, and it won't be meaningful and you won't fulfill any purpose by being here on my channel. Please leave. Our community do not want people here that, again, is not going to be able to benefit from the content. So we want you to find the space that you need to be in. And so we would not be offended by the lease if you had to, of course, part with us today and find, somewhere that's more suited to what it is that you want to learn. Overall, Overall, I want to tell you this. If you will not listen to the market and what the market is telling you, you will not get the help that you need. So I want to say that to you outright. All right. So the market is a fluid event. It's a fluid event, and we're capable of fluid intelligence, which is, this is the definition for it, the ability to think abstractly, reason quickly, and problem solve independently of any previously acquired knowledge. That is why you can read this hard right edge. I just want you to think about that. The market is a fluid event, and you have this capability. You have this capability. Everyone has it. Okay. So it really is important that you understand that you can read this hard right edge, the live bar. I know that they're not moving right now. You can read that live bar in real time, absolutely in real time. And I want to make you aware of that and how it should unfold. All right. So the three videos that I just did, the three sessions that I just did, goes through that more intently. So you'll be able to get to see how all of that pan out. And I'll try to give you a little bit of that before we go. All right. So just want to make sure that I tell you that The majority principle, that's the thing. All right, so we want to see the midpoint. That's that black marker, which is that black horizontal thick line here. We want to see that rise above this bar's high. So we want majority of the bar to get above this bar's high. This will be a no close bar, so we don't want to see a close back beneath this bar, preferably, and that will be the hard stop beneath here. Okay. Now, if you're going down, if you're going south, that's north. If you're going down, we do not really want to see a close back above this bar, and then this becomes the hard stop here. Okay, so that's really all we're doing. We're just doing that. So if you're going down, there's one rule. There's not a lot of specifications. There's not a lot of terminology, and that's what makes this channel original, because we're not going to give you a lot of different things that you need to look for. There's one rule, and this is all we're looking for. And we're going to listen to the market. That's definitely the other thing that makes this channel different, because we're not going to do that. We're not going to listen to no one else. You don't have to listen to me. I don't want you to be, of course, subjected to me telling you this all the time. And that's why I'm making sure that this content is available for you. You need to be able to listen to the chart, and I want to show you how to do that. And that's all I want to do. I want to show you how to do it, and then from there, I want you to take off. Just go ahead and make trading whatever it is that you would like to have it do for you. This is how we work. Now, this is how we work, because this is a decision place. This is a decision place. That's all that's happening here, is a lot of decisions being made on various different price levels. Thought, action, habit, character, destiny. We choose outcome, but we cannot control it. All right. So we cannot control the outcome, but we can choose it. We would have in mind where we would like to be, but we can't control what happens, with the outcome. It's the in-betweens that we're trying to adapt along the way until the outcome becomes what it is that we would want it to be. We trust in the function of it. All right. So fluid intelligence is the function of the mind. That's how it works. Now, the market. Now, this is the market. The participants create the outcome. So they create the outcome and have designed the function, the numbers and percentages. Fluidity is the function of the market. So they create this process and have designed it to make sure that the function itself will ensure that this outcome will happen, because they're, of course, responsible for the pricing and all of that. And that's why I say they can absolutely make sure that the outcome work. And I try to make sure that you're aware of that throughout the videos, once you begin to watch them, that the market knows where it's going. It's just like us. All right. So we have a thought, and then whenever you think of something, you have the end in mind. And so whenever you think of something, you're going to absolutely know what it is that you're thinking of. You have an image in your mind that's directly affecting whether or not you make the choice to take action to move towards that outcome. I want to say that to you just one more time. Whenever you have a thought, okay, this is your trend, you have your end in mind, and that's why they look the same, and that's your trend distance, that's your outcome. All right, so whenever you have a thought, you would absolutely begin to move towards that outcome, or that destiny, if you will, based upon what it is that you envisioned or you imagined or perceived yourself being able to do. And most people wait until there's trend lines, moving averages. If you're not familiar with these terms, you will be if you stick around and learn trading. Most people use these tools to try to define what a trend is. That's not what you want to do. You'll want to listen to the market. Let the market tell you what a trend is. Let it prove to you how far it's willing to go, and then it will tell you how much further it will go. All right, so it's really simple. That's important, because when you're using these other tools, I want to say this to you. When you're using these other tools, you're waiting for angulation, slope, and oftentimes by the time it gets too far gone, you're either getting in your habit or you're getting in on character, and then the next thing you know, it's turning around, it's going the other way. I want you to be able to get in near action. So that way you're able to profit from it pretty quickly and get out before it even gets this far, or definitely begin to get closer to trailing it. So that way, by the time it gets here, you're able to just book your profits and get what you need out of the market. All right. So we only have one rule. That's the main thing I want to say to you. We only have one rule for going short. So if you're going down in the market, we only have one rule, not a lot of specifications, and we only have one rule if you want to go up, and that's going long or buying the market. All right, so it's really simple. Now let's go take a look at yesterday. So that thumbnail that I showed you, they had a trend. Now these bars are colored green. there's indicators that I provide that will absolutely do most of the work for you. All right, most of the work for you, and you can take a look at those videos that was provided for you, the three videos, and it kind of outlines the offer there. All right, so but this is the indicator that provides it. I count the bars. Now the trend is 7 bars. All right, so if you're not familiar with trading, I only want to count 7 bars starting from the one here. All right, and then you count the seven, to the upside there. And then again, like you have a thought, you have the end in mind. That's what it should have become. But that's not what happened. All right. So I want to make sure that you understand that. Here's the trend, and there's the trend distance. They got almost halfway, if not just a bit more towards it there. So we'll count it. On the way down, you go with the 7 on the way down. You go with the 7 on the way down here. You count 7. They all have to close lower or higher. So this is the close. It needs to close higher than the prior. Okay. So whichever one you counted, you need the next one to close higher than the prior. And from over here, whichever one closed lower, you need the next 6 bars to close lower than that first one. And so you get 7 in total. And that's how far typically it will go before it turns. And so when I said in the video yesterday, oftentimes, definitely when it's an acceleration like this, they'll turn around once they make 7. They absolutely will. And of course, when they do the trend distance, it's the same behavior. When they make the trend distance, it's the trend. It's the same thing. And oftentimes, once they make that distance, they'll rotate as well. So we're dealing with rotations because that's what the market is doing. It's constantly going up and down, the ebbs and flows, if you will. So the minds, the collection of minds that created this experience is capable of ensuring that they're able to get to their destination. All right. So the center of the thought, I'm sorry, the center of the trend is the cost of the thought. Do forgive me, got a little mixed up there. The cost of the thought is what we do. So we have primary and secondary values. The primary value is the thing that we rank the highest, and that's what motivates us to move towards our destination. The market has the center of the trend, which is an evaluation point more or less before it gets on its way. Okay, so I just want to tell you that. Now let's just take a look at some more of this. So wherever you're seeing arrows, I didn't mark trend there. Do forgive me. I did mark the trend distance, but yes, you see it. There was a trend there, but they ran right back into the center of the trend. Again, I covered all of this in real time on yesterday. And we read each bar. We read it. All right. So you can go back and take a look at that video in session 3. All right, so that low, I told you that 519 75, I'm sorry, 513, it was 513.50, 513.50. No, that was the low. I'm sorry, I got it right. So that was the low on yesterday, but the 513.50 was the price that I said that they needed to close above. That was this price right here. All right, so that was the low on yesterday, that 519.75, and they managed to set a trend, and then they went the trend distance. And I've told everyone that oftentimes when they make a trend distance and it fails, whenever the market heads back in that direction, oftentimes you can expect them to get to the failure. So you can pretty much bet that that's where they're headed. And again, take your time learning what it is that a trend can do. I want you to either look for the no touch, no close setup, which is that price pattern that was on the chart. Okay, we want a bar, and then we want the very next bar midpoint to exceed this bar's high. So in the uptrend, which this is trending up, we're looking for this. That's all we're looking for. And so every bar that's colored, that's this bar. Okay, so when that scenario show up, you don't have to wait till this bar close. When that scenario shows up, get in the trade. Have your stop right there and just hold on and expect. Now here's the thing. I want you to expect the distance of this. That's all. All right, so from wherever this midpoint get above here, I want you to kind of start out with just going for this. That's it. Try not to go for too much. I want to make sure I tell you that. So, new trader, if you see the green bar, if you see the green bar, it's because this mid got above that high and it did it in real time. So when you see it doing it in real time, hurry up and put your stop there and just go for that distance. Go for that small this bar right here. Go for that distance right there. That's all you need to go for. And repeat that process. All right. So this is a down bar. It is. It's a down bar and it's red. But because this bar's mid got above its high, that this red bar turns green. And so you will go for the distance of this red bar, moving forward. So as this bar begins to increase in size, just go for that distance moving forward. And you would have been out of the trade by the time this bar would have closed. You would have been out of the trade net positive. And try to create that same experience several times over. So everywhere you see a green bar, as this bar's mid got above that red bar's high, I want you to just go for the distance of that red bar. Well, it's green on the inside. Just go for that and then get out the trade. It's just that simple. All right. And try to everywhere you see that scenario, just go for that small distance and you should be able to get profitable pretty quickly. All right. It's really simple. All right, so you didn't get any downtrend on the way. So no downtrend and none of that. There's no downtrend, and so it was up all day long. All right, so everywhere you saw the green bar, remember what I just told you. As long as there's no downtrend, we're only looking for this one rule. All right, so one rule, we're only looking for this mid to get above that bar's high to go up. But you have to make sure that there's 7 bars. And you preferably should, now it's not going to always offer you this, preferably try to get in near the center of the trend or the cost of the thought. Try to get in near here if you can. Just if you can, try to get in near there. All right. And go for this bar's distance, only that bar's distance. Try to do that until you become really proficient at doing it. And then from there, work your way out to more, more of a profit. All right. So now, the downtrend came in, but it was roughly about 3 o'clock. Yeah, it came in and it didn't want to make it. All right. So and then they gave you the uptrend, and that was the end of that. Now let's go into today. Remember that 513. I want you to keep your mind on that. We're going to take a look at that as well. And we'll take a look at the real time for a few minutes. I don't want to hold you long, but I definitely wanted you to be able to see the structured interaction there via the candles being colored based on the method itself and the trend because I couldn't do all of that in yesterday's video. I wanted to make sure I read the chart plain. All right, so interesting stuff happened here today, and I want to make sure you're able to see that as well. Here's the trend. Here's the trend. We had a trend failure, so it couldn't get there. All right, so after the trend was set, it couldn't make it. It couldn't make it. Now you had your green bar here, and yes, you're supposed to go for this distance here. It did not want to get there. It didn't. So you would have definitely lost here. Now in yesterday's video, I outlined how to use this wick. The moment you see it come off its low, the more advanced trader, I'm talking to you, the more that it comes off its low, you would know to have your hard stop back here and just go ahead and take it up and begin to measure the wick itself. Just go for the wick itself if you're advanced, but beginning with this information of how to read the live bar, go for the distance of that wick. It would have gave you pretty much a good majority of it. Depends on where you entered in on this wick as you seen it come off that low. You would have got pretty much the majority of it. All right, so want to make sure that I express that to you. They came down to the center of the trend and they just couldn't get back up. And again, here's new trader. You would have definitely took another loss here because it couldn't make it. The more advanced trader, yes, that wick there, the distance of that wick showed up in front of that bar. Okay, so the more advanced trader, you would have been able to get that to work. So partially here, definitely here, advanced trader, and the new trader, you can try that, but I suggest you watch those 3 videos first. Make sure you retain those sessions first before you even attempt to try to, get into the distance of taking out wicks. Don't do that right away. Please don't do that. So we set a trend down. Now here's the interesting thing I want you to pay attention to because we didn't make the trend up. We kind of got stuck right there at the cost of the center of the trend, the cost of the thought. We kind of got just, sandwiched in right there, a lot of back and forth, and then the acceleration through. Your trend bar didn't come in until down here. All right. So you had the 6 on the way down, but you didn't get your 7th one until here, which is really interesting because they set a uptrend in between all of that. They did. And so you have to play what's there. Okay. So you had your uptrend without your 7th bar. Play that move. Just go ahead and play that move. They dove down. They gave you a trend bar here, so you would have had to wait. You couldn't go in, new trader, because the trend bar was here. They came down Here's your bar here, new trader. The minute this got above it, you go for the size of this bar, and you would have definitely hit it. All right, so really simple stuff. Want to make sure that you can start out just doing something simple. Now, the more advanced trader, the more advanced trader, this the center of the trend that formed down here after they came back and knocked out your uptrend. All right, so that's the center of this downtrend that they never went past. And these are the other trends that were set in there. I'm not going to dive into all of that. Now, that trend distance, I know it was pretty big. All right, so this is pretty broad, and I projected it off of the trend bar once it was set. All right, so I didn't give it to you from up here, although you definitely would have made that. Just counted you another trend because this is a slow bleed up. And I told you guys in yesterday's video, when they do them parabolic runs like that, to try to wait, because oftentimes they'll do the smaller ones to lure you to think that it's not going to continue and have you go the wrong way. And then all of a sudden they'll make that trend distance. So sometimes you can wait for the more conservative drift more so than the accelerated push. I wanted to make sure that I say that to you. And so they got back to the center or the cost of the thought, the center of this trend down. And all I did was take that distance and project it forward off of the trend bar here. Because if they're not going to take out this trend here, you're pretty much destined to head back in that direction. And that's why I told you, oftentimes when they have trend failures, they'll head in that direction when they go to turn around. So here, they almost set that trend, but then they turned against it. Okay, but that's not to say that they have no intent in going in this direction. They absolutely do, even though that trend bar wasn't set yet. But they have intent on going in that direction. All right. So and then they got down there, and there's your rotation. So whenever you get, I don't know if you're paying attention to that, new trader. Whenever you're getting, now this is again right before 9:30. You got trend distance. Once you get a trend, it'll rotate. Be careful. Be very, very careful with that. You got the trend here. There's your rotation. All right. So there's the trend distance. They got more than halfway. So I counted. There's your rotation. You got a trend here. There's your rotation. You got trend distance. There's your rotation. You got your trend on this bar, small rotation, and then the trend distance. Now, this one is tricky because they didn't give you a rotation. They just kind of bled all the way down. And then, of course, once they hit that transition distance, they rotated. All right. So, trend here, not a rotation right away, drifted up just a bit more, gave you a base, and then they made the trend distance. And then that's when they rotated again. Small rotation on this trend here, small rotation back into the center of the trend, push down. It's more than halfway, so we'll count it. They went a little bit more than halfway. Gave you your trend here, kind of stall base, if you will, rotated, then of course pushed up, gave you the trend distance, turned around, made made the trend came in here. So on this bar here, it's kind of large, but made the trend here. They kind of pushed up, and then of course they made that trend distance uh here. All right, so they made the trend distance. There's that price from yesterday, that 17,513. There's the price from yesterday, the same price, and let me compress this so you can see it. That same price where I told you in yesterday's video, the 17,513.50, see if they can close above that today. And on yesterday they moved down first, okay, towards it, and they fought us in that video, and we tried to read it in real time. And then of course you got that 17,519 as that low. They parabolically moved up, okay. And I'm only reading you the 930 sessions. That's why you're not seeing any other markings up there near that high. And then they made it back down here, okay. And so they're gapping now. This is real time here. They're gapping through that information as it comes up. All right, so they made the trend distance. Let me do as I suggested that I would. Well, made mention that I would read it to you a little bit in real time. Let me try to do just a little bit of that. I don't want to take up no more time with this information. Just want to kind of give you a chance to see it in real time, and I'll see can I give you some of that. So one, two, three, four, five, six, and there's seven. All right, so seven. New trader, if you're trying to go long, remember there's only one rule. We're looking for majority, and we want to make sure that it's a move to the upside. So Now there's a wick that's being plotted on the bottom of that bar, and I'm gonna make this a little bit bigger so everybody can see it. Everybody can see this. All right, so let's make this really big. There's a wick here. Now the more advanced trader, okay, if they are to go up, the moment that that bar close, you would be aiming off the close of this bar for that distance, and that would put them through the back of it. That's if they will not break the low of the bar. That's the only problem. They can't break. See, that's not gonna work because they're taking away that wick. All right, so that's not okay. Let's see, can they pull it off? But the distance of that wick, they already made it. That's too small. I don't like when they do that. That's too small. Let's see. Let's see for the new trader. Let's see if your opportunity is there. Now, if you're just doing, let's say you're just doing bar, each bar is a trend. Let's just see if you're doing that, you're expecting off of this close here, if you're just doing each bar as a trend, you just want to go down. Okay, because you see the decline, you just want to go down, regardless of the fact that it's a trend here. You'll be looking for them to give you a possible exit here. Okay, for the each bar is a trend. Okay, each bar is a trend. That's a trend. They're supposed to give you trend distance. Okay, that hasn't made it yet. So we're looking for a target of that. We're looking for a target of this bar down to here. Now the wick, because they're making a wick. Now they cannot break the top of this wick, and that the moment that this bar close, you're looking for this distance down, but they can't break the top of that wick. More advanced traders, so that would put them below this red bar. Okay, so that would put them below that red bar. Okay, so you can't have a stop here if they're not to break this bar's high. Absolutely wrong thing to do. You don't need to do that. So we're trying to read the fluidity while it's moving. Really important that you understand. This is what I'm trying to teach you. How to read the market while it's moving, the hard right edge. All right, now they can't break that low. I'm sorry, they can't break this high if they plan to make this distance, because then we're going to treat this wick. Now, this is getting closer. We're treating this wick as a trend. All right. So we're treating this wick as a trend, and we expect this wick's distance from the close of the green bar downward. And so that would give you a target of here. So if you're a scalper and you're just trying to get in fast with a tight stop, this is how you would go about it. All right. So we would want a target of this for the wick. Now, if you are a trader that's just doing the bar aspect where this was a trend and you're looking for the trend distance, you would be going for from the close, you will be going for this target here for this bar. All right. So that's how you would be approaching that information there. We're still waiting for a fill here for the wick. Now, this is the wick. Okay, there's the fill for the wick. And now we would be waiting for the fill for the trend down. New trader, you do not have a long yet. So you're not able to take the long. You're just not. All right. So it's not to say you couldn't trade what I'm telling you. We're currently disclosing to the others, people that may be a little bit more experienced with this. You can trade that way, but I prefer you to just start out with the majority rule. Just try to start out with that. Now, of course, the majority rule is applicable in these scenarios. It is everything that I'm telling you. The market is moving. Remember, let's go back to that definition, please. Just let me take a moment to do this because I want you to learn this information. Majority is the principle. It's a principle. That means it's like gravity, if you will. I don't care if you're 700 pounds or 70 pounds, it's going to work regardless. Okay. So it's something that it controls how everything function in a sense. So it doesn't have any regard for who's using the gravity. The gravity works. Okay. And the simplest way of me explaining it, majority is a principle. It's a principle that will work, and you can't change its function. That's just how it works, that the group which has the most supporters get to decide the rules that all, including the any opposing minority, so it's only two positions here, majority and minority, will be compelled to abide by it. So I want to make sure that you understand that. So there's your target. There's your target. I hope I'm making sense to you guys. I want to make sure that I'm making sense. And if I am, let me know. And I'll appreciate that, because that's my goal. I want to reach I want to reach you. However it is that you understand. That's why I give you diagrams. That's why I'm taking apart the chart while it's moving. That's why I do a little bit of historical. People learn differently, and I'm doing the best that I can to make sure I appeal to each and every one of you who stop by the channel. I want to make sure that I'm showing you how to look at the chart very objectively. All right, so just a little bit more. I can't do much more of this. Again, I just made 3 videos on this, so I don't want to do much more of it. I really don't. All right, so let's see what we get here. Now, there's a wick on its low, so clearly they can go the distance of this wick to the upside. So that will put them further into this bar, okay? That will put them further into this bar, maybe to go through the back of it. So the distance of this wick, you can pretty much, I'm gonna just, yeah, they already made it. They just made it. So there it is. So now the new trader, this your setup. This is your setup right here because the mid is getting above this bar's high. Here's your hard stop, and you are only supposed to go for the distance of this bar. And so you're pretty much almost to target because it was getting above the high long before there we go. So now you're out of the trade, new trader. New trader, you're gone. You're not sticking around. You're already out of the trade. You took your money and you're out. All right. So the person that wanted to go short, okay, using this bar as a trend, the very next bar, is supposed to be your trend distance. You got your target hit. The individual that I told, hey, use the wick and go for the wick distance until you become, efficient at doing this aspect of it, where you take each bar and then go for the bar's distance. Just go for the wick because it's a bit more conservative. That way you're exiting the trade before the rotation, because sometimes the rotation will show up without going the distance of the total bar span. It will rotate. So the easiest way to do that, when the wicks start showing up, just go for the wicks, because they've been doing a lot of wicks. That's all I'm gonna say. They've been doing a lot of wicks, and I hate to see you guys get trapped messing around with that back and forth. I don't want to see that happen to you. But everything that I'm explaining to you is that diagram. All right. So it's that diagram. Let me get it for you just one more time. Everything I'm explaining to you is this. It's just the majority, how to see the majority in the chart. I'm trying to show you how to read fluidity while the market is moving, but yet abiding by the principle of majority. It's very important that you look at the chart and read the chart for the principle of majority. So now if we're to go the distance of the trend, let's go ahead and take an assessment of that, and then I would absolutely have to go here. If we're going for the distance, that would put us back up here above this area here. All right, so I want to make sure that I'm making it plain for you, very, very plain. Now we do have a wick here. Now this is where you're getting all of the different spinning tops, the hammers, the inverted hammers, whatever names you want to come up with this stuff. This is where you're getting that activity. But because the market is always rotating, it's always moving, I like to just do it based on what it's doing. It's trending. It's just not maybe in the time frame that you're looking at, but it's trending. So this wick, as long as they don't break the top of it, this is a trend, and you should be expecting the distance of that wick back down as it's doing currently. And so if they're not going to break the top of the wick, so let's go with the high here. That's 453.50. High here, 453 and a quarter. So they came in under one tick of this. That is a trend. They can run the back of the bar, and they did. All right. So I'm trying to teach you how to read the market based on fluidity. It's fluid. And so in order to do that, and this, let's go back to our prior diagram here. Let's go back to our prior diagram here. Fluid intelligence, this is what we're capable of. It's the ability to think abstractly, reason quickly, and problem solve independently of any previously acquired knowledge. So we don't have to look really far, in the chart. We don't have to look back and get any information back here to know what should show up. We're trying to get an understanding while the market is moving right now, based on its movement, what it should do in the future. What it's doing right now, while it's moving, we're saying, hey, based on your performance, should the clock tick out, this is what we can expect moving forward. All right. So we're trying to read it based on what it's doing currently, and what it suggests. Because remember, it's just like, let me bring back that chart just one more second here so you can really see it as a whole. Thought action, habit, character. All right, destiny. That's what this is. All right. So the market is a fluid event. Okay, its fluidity is a function of the market, and we have fluid intelligence in our mind. We have to make sure that we're utilizing procedural knowledge. Okay. And so procedural is in relating to an established or an official way of doing something. So when you go to get, to see the doctor and get anything, any kind of procedure done, he's going to implement the same thing over and over and over again. New trader. They almost, let's see if they went that distance. He's going to do the same procedure. Do forgive me there. They made a trend with the wick. They made a trend with the wick. So they're trying to come back down. New trader, this may not work for you. I'm not certain. I'm pretty certain you probably could have caught that, but let's just say it wouldn't have worked. But that mid, no sooner that mid clears this high, which I think you could have got out net positive on this. I do, because that mid got above this high before it stopped right here. It was above that high because there's a margin of difference there. So you probably definitely could have exited profitable. But again, okay, the trend down off of the wick. Now this is the trader that's been doing it for a little while. The trend off of the wick, and they shouldn't break the top of that wick. And then you should look for this distance here back down below that bar, which would absolutely knock this out. Okay, so that's how you can kind of filter out which no touch patterns will work, which ones won't. That'll kind of give you an idea of what that all looks like. All right, so really, really important. Again, this is the center of the trend, the cost of the thought. The doctor, he's always performing the same procedure on that particular I guess scenario that you're dealing with. So whatever it is that you may be having a procedure done for, he's going to implement the same steps. And so when you look at the market, you need to, of course, now this is the short side scenario, but I don't believe we have a downside trend. You have to look for the same thing. If you want consistency, you have to do the same thing. All right. So just want to make sure that I state that for you. Again, my name is David, and if you find the information of any use, please tell a friend, because that's what the channel is all about, trying to give you information. This is the thing. Want to give you actionable information, something that you can pull up the chart and begin to take action right away without, having I guess, a long learning curve. I don't want you to have to take too long to learn this. I really don't. I want you to learn it very, very quickly. The moment that you pull up the chart, I want you to immediately listen to the market. That's the main thing. Listen to the market, the hard right edge. I want you to listen to what it is that is saying to you. What is it that is suggesting? New trader, you can absolutely go in both directions with that price pattern. It's not exclusive to the trend. It's the 7 bars. It's not. I'm just trying to give you a base to operate from. That's all. And so if you look at the chart and you find this scenario, it's possible that it can happen. If you find this scenario, it's possible that it could happen. All right. So those two rules is all you would need to trade profitably. All right. I want to make sure that I say that to you. This is not regurgitated information. It's original. Okay. I'm not simplifying somebody else's content. That's for other people. That's not me. I want to give you something you could apply right away. It's not a lot of rules, and you'll be in the trade net positive before any of the popular stuff that's online show up. And so if you're a new trader, I'm sure you've probably seen some of the popularity online. And I'm gonna just go over this so you'll understand the difference of this channel versus someone else's. Everybody is chasing this concept here. Okay, 2 bars not touching. Okay, so you're low here, you're high here, not touching. I don't do that. Okay, I don't do that. If you notice, my bar is red and it doesn't require this 3rd bar. I've been trading this way for so many years. There wasn't an ICT online at all. I want to make sure that I state that to you. So you're going to see a lot of that new trader online. This is not that. This is the function of the market. This is how it works. That's why I say this is a formal way of taking training and becoming a professional at what it is that this market offers. It's not about popularity. It's not about terminology. This is about learning function, how to understand function. So once you understand function, you can get in trades net positive without a box. All right, without some gap between 2 bars. You don't with 3 bars. You don't need that. All right. So I'm telling you, you could take the trade here and expect that distance there. There's no gap. Okay, so I really want to say that to you, new trader. I want to let you know what's out there. Again, I have absolutely no qualms with the information that other people cover. They can cover it however they want to, as I cover my information how I want to. It's simple. I'm just trying to give you function mechanics because the market is doing the same thing and it's not going to change. I don't care what we think about it, however many terms we put to it, it's just doing the same thing. It's based on the principle of majority because it compels the minority to follow. We're not going to make trading complicated in this space. All right. So in this channel here, we're all about simplicity. We want to make sure that it's not my opinion. It's not what I think about it, because then when we start doing that, we're going to end up with different results and we're not going to see the chart the same. If you want consistent results, if you want the thing that the professional trader has, you have to implement the thing that the professional trader knows. And so this is what I know. Now, someone else may explain it to you in their way, and it's not to say that that can't work, but I still want you to know it's like gravity. Whether you're 700 or 70 pounds, you can't change what gravity do. And so someone else may say it's this, someone else may say it's that. I want to say exactly what it is. That's all. I want to tell you exactly what I know it is, no matter if you get your oscillator, your trend lines, your chalks and order blocks or whatever people want to call this stuff. I want to say exactly what's happening. It's the principle of majority because we're moving, orders. So majority is important. That's all. It's important, and that's all it is. And it's I'm not worrying about block orders. I don't see block orders. I see majority in the chart. That's what I see. All right. So I just want to tell you that. So new trader, listen to me. It's a principle. It's a principle. It's majority. I want you to be able to easily spot it. And I wish you all the best with your trading. Take care.